back. You're watching Your World at 10 on CNBC TV 18. Now, this is the week when the Indian markets hit a 14-month high. It's also the season, like I told you earlier in the show, of a whole host of India conferences. Credit Suisse, for instance, has been holding its financial services conference in India over the last couple of days. And joining us tonight, a man who very rarely does media interviews, Mihir Doshi, or better known as Mihir Doshi, the country head at Credit Suisse, joins us to get us a voice from the ground. What are investors telling him is their appetite for Indian equities? Mr. Doshi, thank you very much for joining us. Why a conference focused on financial service firms? And you seem to have two, real estate firms in that conference presenting as well, DLF Unitech. That's an odd mix, financial services, real estate?
Not necessarily odd at all. Because financial services as a broad definition in the MSCI index includes real estate as well as insurance. So actually speaking, it's not necessarily just banks or securities companies. It includes real estate, and therefore there's more than just two real estate companies. We have a bunch of them doing one-on-one meetings. So it's banks, insurance companies, unlisted insurance companies, and real estate listed and unlisted companies who have come over the last 2 days to our conference.
And why the financial sector, Mr. Doshi?
Why financial services?
Go ahead.
Sorry, Menika. I think the main reason why we thought of a sector-specific conference and not necessarily a broad multi-sector conference was, if you look at again, back to the MSCI index, more than 25% of the index is the financial services sector. Probably the most important sector in terms of if you look at India as a whole, and how the sector plays into every aspect of the Indian growth story. The financial services sector is critical, and our thinking was that the best way to get people to India to meet these companies would be a good way for them to understand the sector.
All right. Mr. Doshi, can you characterize the kind of investor turnout you've seen in this conference and whether it gives you a sense of the appetite, the remaining appetite for Indian equities, so to speak?
I think first thing, if you were to measure purely number of attendees, yesterday we had Professor Raghuram Rajan address the crowd over dinner last night, and I think it was standing room only of about 270, 280 people in the dinner, at the dinner. But in terms of the overall conference over the last 2 days, we've had probably about 450 to 500 one-on-one meetings scheduled for our clients. In terms of registrants for the conference, both either the one-on-one sessions or in the broad presentations, we've had about 200 plus clients who have registered for this conference. In terms of, does this give a good perspective on interest in India? I think it does. I think, if I look at the cross-section of people who are attending, it's, again, the ones who attend the presentation, the ones who are getting a flair for India, and a whole bunch of them, versus the ones who know it well and want to get a more detailed discussion with the corporate. We've had a host of them. So I think the interest in India remains fairly solid, I guess, which is reflected in where the markets have gone over the last few months.
Any names, Mr. Doshi, that you can share with us of new investors that have come to your conference, and therefore new investors that are actually interested in India, new classes of investors or new firms or any of that?
Well, I think, like I said, it's a broad section both of long only as well as hedge funds across all the three major regions. We look at India. I think the names, I think a lot of them, Menika, the names which you would tend to find in general interest in India. So I don't think there's anything specific. I've not gone out and found the new diamond in the bush to give you a name.
All right. I want your view, as well as the derived view that you have from your interaction with the many investors at your conference, on how sustainable are the gains that we've seen in the markets, both globally as well as here in India over the past few months. Now, there is a debate raging out there, right? Many people think that the equity markets have run up thanks to the tremendous liquidity that was pumped in by various central banks across the world last year. Others believe that the fundamentals, while they may not be looking up, clearly have stabilized to some extent, and that's what's driving the markets. What's your view? Which part of this argument or debate, where do you stand on this?
Well, I think you've touched upon both points which are driving the gains. I think global liquidity clearly has helped, both in the context of India. Global liquidity as well as domestic liquidity has clearly helped the market gains. And are the markets running ahead of fundamentals? I think we are seeing signs that there are pockets of signs where we're seeing stability setting in, and the worst could be behind us, and that's what's driving the gains. From these levels, do we see the markets consolidating or continuing to have a move up. Our house view, and Nilesh has been quite prolific about this, clearly still remains that by year end we will see the market higher from where they are right now. Do we see a sense of consolidation at the present moment? Probably. We have had a run up from the lows across the globe, the U.S., Europe, Asia, as well, and including India. So I think it probably remains choppy to positive. I think when you look at, like you asked me, the number of investors looking at India, if the interest in India remains as strong as it does, liquidity in India clearly has been a liquidity-driven market. You combine liquidity with an ability for the government / corporate in India to deliver on some of the promises. I remain very optimistic that we will continue to remain firm going to year end.
In your assessment, Mr. Doshi, how does India compare, with other emerging markets, both in terms of fundamentals and the way stock markets have risen, and therefore how much more we can move in terms of upwards?
I think in terms of gains, if I'm not mistaken, I don't have the numbers at the top of my fingertips, but I think we've pretty much been in line with the rest of the region, give or take. I think China, for example, has probably outstripped us, but if from the bottom we've been in the high 50s, I think we're pretty much the same. Where do we see, I think our view is, India should probably be tracking a similar pattern as the rest of Asia. I don't see us actually decoupling and running away at the expense of other Asian markets, which clearly was, yes, at the expense of the Western developed markets. I think the emerging markets will attract more capital and will be attractive, and that's one of the couple of presentations which we made over the last 2 days. We've had our regional strategist Sakti Shiva talk, and we've had our regional economist talk, and that's clearly been one of the theses which we've been talking about, including Professor Rajan yesterday had a similar thesis that the emerging markets will benefit at the expense of the developed markets. I think that remains true. Within that context, does India benefit more? I think will also depend now. We've had our gains. Now the next step is to focus on the delivery from both the government as well as the private sector.
All right, let me talk a little bit about corporate fundraising, Mr. Doshi. Might I gather from the many comments that you made regarding both the kind of investor appetite there is for Indian equities and the potential run-up that we can still have in stocks, that there will continue to be appetite for QIPs, GDRs, IPOs. Of course, the investor classes are different for many of these instruments. GDRs tends to focus a lot more on foreign investors than any of the other classes. For instance, IPOs will cater a lot more to domestic, investors. But do you continue to see a lot more appetite for this kind of corporate paper?
I think first thing, I absolutely do think there is appetite. Also, just to clarify one thing, GDRs, yes, is a product which caters primarily to the foreign investor. But having said that, it's a very similar investor base which is looking at a QIP or an IPO. It just excludes the domestic-based investors in that offering. The transactions which have happened in the past few months, and I think will continue. I think if the corporate story is strong, even if either it's an IPO, obviously it's a new project coming up, a new company going to the markets, or if it's a story of deleveraging, I think the investors are ready and are willing to look at the stories quite positively. So I think there is appetite for paper, and I think that's going to continue going into the next 6 to 12 months. And you and I both know. Between the government and the private sector, there clearly is a demand to raise a fair bit of money.
Oh, sure, there is a demand, but really, how much can the market digest? Can you put a number to how much we can squeeze out for both the primary and the follow-on market without hurting really the secondary market?
I can put my finger up in the air and see how the wind is blowing and give you a number, but I think my colleagues at Credit Suisse have done some work on it, and I think Nilesh has come up with a number of, say, over the next 12 months, you could see $20 billion worth of equity issuance, potentially in the cards, that if the government and the private sector gets its act together. The government does want to raise money, and so do private companies. Now, will that number be met? I think time will tell on how the markets perform, but clearly the appetite is there to go for a fair bit of capital raising.
What you're saying is that there is appetite for $20 billion more of paper. Is that what you're saying, Mr. Doshi?
That's a piece which Nilesh did put out a few weeks ago, and is one of even one of his optimistic pieces. He does say that potentially India could raise $20 billion over the next 12 months.
All right, that should give us many more occasions then to come back and talk to you. Thank you very much for your time in what I can imagine is a very busy conference. Mihir Doshi, their country head of Credit Suisse, speaking to us on Your World at 10.